Good evening and welcome everyone to this earnings call post-announcement of 9 months and Q3 FY23 results of VA Tech Wabag Limited. On the call today from the management team, we have Mr. Rajiv Mittal, Chairman and Managing Director, Mr. Pankaj Malan, Deputy Managing Director and Group CEO, and Mr. Skanda Prasad Sitaraman, Chief Financial Officer. Kindly note that during this call, the company may make certain forward-looking statements concerning the business prospects and profitability, which may be subject to risk and uncertainties, and the actual results could materially differ from those in such forward-looking statements. The conference call will be archived and a transcript will be made available on the company's website. The company's results update presentation has been uploaded on the website and stock exchanges, which provides an overview about our core offerings and the analysis of the results for the period. We trust that you had an opportunity to look through the same. We will start with the opening remarks from the management, post which we will open for the interactive Q&A. I now hand over to Mr. Mittal to take you all through the key business highlights. Over to you, sir.
Thank you. Ladies and gentlemen, welcome to this earnings call for Q3 and 9 months FY23. Along with me on this call is Mr. Skanda Prasad Sitaraman, our Chief Financial Officer. I'm also joined today on this call by Mr. Pankaj Malan, Deputy Managing Director and Group CEO, who has joined our leadership team at Wabag as part of our ongoing succession planning exercise. Pankaj comes with a rich experience in power and steel sector, leading diverse roles in engineering, greenfield projects, and also leading profit centers. He was earlier associated with JSW and Vedanta as part of their steel business and was a long-timer in the Tata Group in their power and steel businesses. Pankaj will closely work with the leadership team of Wabag in the next month and will take over the Group CEO responsibilities from me. I wish Pankaj all the best and I'm confident that he will lead the Wabag Group to great success. Our momentum of delivering profitable growth continues through the 9-month period as well. As a group, our strategy has been to focus on international geographies, industrial projects, advanced technology plants, and EP, which is engineering and procurement business, and also continued focus on long-term O&M business. This is reflected in our improved margin profile and cash position, which we have consistently demonstrated over the last many quarters. As a multinational player, about half of our revenues consistently flow from projects in international geographies. As an advanced technology business leader, our order intake majorly comprises plant in desalination, recycle, reuse, and effluent treatment segment. This mix of international presence in emerging geographies, focused orders, and increased mix in EP projects directly reflects on the consistent growth of our operating margins and enables us to maintain a net positive cash flow. As a group, we have also stated our objective to increase the quantum of our O&M business, which is now stands approximately around 35% of the order book, and with more DBO and HAM projects in the pipeline, long-term O&M business are the future and we are well placed here. I'm proud to inform you that Wabag has once again improved its global GWI ranking from 4th place to 3rd position for ensuring safe and clean drinking water and healthy environment for over 88 million people. Also, it is a matter of great pride for us to be recognized among the top 10 global desalination players by GWI. Both these recognitions are further testament to our position globally as a water technology leader, global manufactured water leader, and our consistent contribution to the cause of global water security. As a group, we have aligned our business and focus areas towards sustainable development goals of the UN, in specific SDG 6. We are already a water positive organization, and with our focus on green energy production from biogas in our wastewater treatment plant, we are also contributing to Pancha Amrit goals set by India at COP26 of achieving 50% energy requirement of India from renewable energy by 2030 and achieving net zero by 2070. Again, circular economy is very important for Wabag. We have been advocating that waste to wealth is our theme in promoting a total water resource recovery model through tertiary treatment plants where we manufacture clean water from used water, which is deployed for non-potable purpose, thereby releasing water for potable use. Our plants across the world produces over 2,500 MLD of tertiary treated water. Also accompanied in such plant is a generation of green energy from biogas, which powers the treatment plant, making them energy neutral. Our biogas plants produce over 40 megawatts of green energy. The sludge that gets produced from the treatment plant is converted into manure, thereby ensuring the sewage is resource and not a liability. Circular economy in water is thus a revenue model and not a liability model. Recently, Wabag conducted a conference on manufactured water in India, in Chennai, with eminent panelists from municipal and industrial segment participating in the panel discussion, and also it was graced by a large audience. We also showcased our marquee plants in desalination and tertiary treatment plants in Chennai. Conference enabled creating higher awareness and acceptance of recycle and reuse for industrial, agriculture, and indirect potable reuse purpose. Wabag has always been in the forefront of using technology in the water sector, and with our R&D centers in Vienna, Austria, Winterthur, Switzerland, and Chennai, India, we today have to our account more than 125 IP rights, internally developed and internally used. With our business strategy to focus more on technology projects, both to drive better margins and be in the cream of water treatment business, we have been over the past few years securing orders mainly focused in desalination, tertiary treatment, and industrial segments. Even this year, you would have seen that our three major projects have been either in desalination or industrial water treatment. Also, as informed in the last conference call, few key projects where we are already a preferred bidder are also advanced technology projects. We have always emphasized on being a global leader, and you have seen that our business has been consistently 50% or more from international geographies. It is important for me to mention here about our focus regions in the international space. Europe will continue to remain our hub for incubating new technologies, which gives us an early mover advantage in other geographies. As we move more international, we have the opportunity to increase our EP share, engineering and procurement share of the business, which is in line with our business strategy of improving the bottom line and cash flow, and thereby a better valuation for all stakeholders. EP orders always helps to reduce the construction risk, thereby exercising better control over execution as compared to EPC projects. EP orders deliver better margin profiles since the pass-through construction portion of the revenue is reduced, and this trend of better margin is already reflecting in our performance. Let me now mention briefly a few key business updates. Before I proceed into the business updates, as we have mentioned in our previous call as well, the ordering activities are moving swiftly, and we have already placed a few large bids both in India and in MEA cluster. We are already a preferential bidder in few of our key orders we are targeting, and expect that the awards will happen within this fiscal year. On the other tenders, we have placed our bids, and we are confident of converting a good part of them. In all, our order book, which has been consistently remained over 10,000 crores Indian rupee, will further grow by the end of this year. Starting with India cluster, which comprises of India subcontinent and Southeast Asia. India cluster has been a backbone of the group, with Indian government's various initiatives in the water sector like Namami Gange, Jal Jeevan Mission, Swachh Bharat, Amrut. India is poised to keep growing and contributing to Wabag's group significantly. Our AGCC project, we also call it Sibur project, has been progressing swiftly. Despite the restriction imposed by the geopolitical situation, we have been able to make steady progress here. The 48 MLD Reliance desalination project in Jamnagar is also in the construction and procurement stage. Orders of long lead items are completed, while the site activities have picked up in parallel. All other projects have generally been on track. Our current projects in the cluster span across wastewater treatment, recycle, reuse, and desalination. Projects in the cluster have been generally progressing well. Let's move on to the Middle East and Africa cluster. MEA cluster has a tremendous potential, and we expect to deploy our efforts to convert a good amount of these opportunities going forward. Marafiq sewage treatment plant project in the Kingdom of Saudi Arabia and Ashgal Doha project in Qatar are currently in final stages of completion. Marafiq is under performance guarantee trial run stage, and we expect to complete the project within this fiscal year. A 50 MLD Zarat desalination plant in Tunisia, North Africa, being built for Soned, funded by KfW Germany, is also progressing well and heading swiftly towards mechanical completion. At our 300 MLD independent sewage treatment plant at New Jeddah Airport in Kingdom, which is being built with the state-of-art Nerida technology, all supplies have been completed and testing and commissioning is in progress. The 50 MLD desalination plant in Senegal, funded by JICA Japan, which we received this year, has started moving well on the engineering front, and also the procurement activities are moving at a swift pace. Let's move on to Europe cluster. Europe cluster continues to remain our technology hub, incubating new patents and proprietary technologies which help us to have an early mover advantage in the developing economies, which is our focus market. The significant business of Europe will continue to come from Middle East and North Africa. Lastly, on our Namami Gange for Clean Mission HAM projects, our 187 MLD KMDA STP project being built in Arupara, Bali and Baranagar is substantially complete. We are on track to start testing and commissioning in this fiscal year and complete this plant by H1 of next fiscal year. Our STP HAM built for Budco at Kankarbar, and Diga, where we announced the effective date in Q1 this year, has been moving well, with the engineering and procurement activities substantially complete and construction activities have commenced. On the 40 MLD, Ghaziabad Nagar Nigam tertiary treatment plant for this region, we have progressed over 25% on the project activities. Lastly, on our service, our strategy to grow the O&M business, and this is evident from the order book of rupees 3,200 crores coming from service business as of 9 months this year, which constitutes 37% of our order book. Large DBO, HAM, and one city, one operator projects are enabling this growth in the backlog, and we expect to witness growth in the revenues of the service business in the next few years as the EPC portion of the DBO and HAM project gets complete and long-term O&M revenues start flowing. With a consistent high-quality order book over 10,000 crores and a strong order pipeline, we are confident of continuing to generate value for our stakeholders in this growth story in the years to come. I would like to express my sincere thanks to our direct and stakeholders for their continued support. Before I move on to Skanda, for him to take you through the financial and other business highlights, I would now request Mr. Pankaj Malan to say a few words. Over to you, Pankaj.
Thank you, Mr. Mittal, for this opportunity to speak to our stakeholders. Good evening, ladies and gentlemen. It is indeed a pleasure to welcome you all and to introduce myself as member of Wabag's senior leadership team. First of all, let me take this opportunity to thank group management and the entire board of directors of Wabag for placing their trust in me to do this very important duty. I think I had a wonderful couple of months and had an opportunity to get to know few of our fellow Wabagites over the past couple of, and I've been impressed by their dedication to pursue the mission of the organization, which is sustainable solutions for a better life. I'm glad to be a member of a remarkable community of individuals that are committed to improve the quality of life in this world. The very recent GWI report, which says we are touching the life base of 88 million citizens of the globe. Let me speak something about myself. I have experience in working with diverse leadership teams where I've been largely involved in terms of business growths and turnarounds in a variety of industries, which include power, steel, polymer, and process automation. Joining Wabag, I was part of JSW and have been blessed to work with companies like Vedanta Resources Limited and Tata Group. I think the management of water and wastewater is a promising area for the entire humankind and is the necessity of humankind along with the environmental concerns. Globally, if I was to say, climate change faces itself through water only. 9 of the 10 natural disasters are water-related today. If we were to achieve climate and developmental goals, water must be at the core of adaptation. Not to say and mention over here, Government of India is focusing on this happening sector strongly, which is evident from number of policies and schemes introduced like Amrut, National Water Mission, Nimami Ganges, to name a few. I'm extremely delighted again to be part of this pure play water technology company, which is amongst the leaders in manufactured water with presence in 25 countries across 4 continents and blends. Over years, Wabagites have demonstrated a strong zeal towards technology and an excellent dedication towards making a sustainable contribution to environmental protection and improving quality of life. My top responsibilities going forward would be to further strengthen the EHSS aspects and inculcate digitalization and world-class processes with the cutting-edge technologies into the business, thereby setting the highest standards of corporate governance and creating value maximization for the stakeholders. Looking forward to a more successes and celebrations in Wabag. Thank you very much. Over to you, Mr. Mittal.
Thank you, Pankaj. I'm sure you, along with the entire Wabag team, will take the group to a greater height and successes. I wish you all the best once again. Now we can move into the financial highlights. I would request Skanda to take you through the same. Over to you, Skanda.
Thank you, Mr. Mittal. Good evening, friends. Trust you had an opportunity to look at the results update presentation as circulated and uploaded on our website and stock exchanges. Let me take you through the key financial highlights for the quarter and 9 months ended 31st December 2022. Before I jump into the numbers and other highlights, a few words about the recent Indian central government budget. The budget has kept up the focus investments with higher allocation of rupees 70,000 crores to the Jal Jeevan Mission. The last mile connectivity achieved through the Jal Jeevan Mission will provide the demand augmentation, which will in turn increase the need for treated water in the future. The allocation to green hydrogen 20,000 crores is also encouraging, as this will indirectly increase the business landscape for the water sector. Effective infrastructure budget allocations of over 13 lakh crores is encouraging, and we expect this to gallop the economy forward, especially in these challenging times. In summary, the budget continues to keep the momentum generated in the water sector ongoing. Also, we are confident that the general vision and direction of this first budget in the Amrit Kal is expected to keep the Indian economy growing much faster than all other major economies of the world. Before I move into the financial updates, a key event that happened during the quarter was the strategic funding tie-up we established with Asian Development Bank, one of the world's top multilateral institutions. ADB will invest rupees 200 crores over 200 crores Indian rupees over a 1-year period in Wabag, and this marks ADB's first private sector water investment in India. This is indeed a wonderful testament and validation to Wabag's global leadership in the water sector. I'm also very happy to share with you all that Wabag's short-term credit rating has been upgraded 1 notch to A1+, which is the highest level of short-term rating, signifying our strong business and credit credentials. As a management team, we have been putting in our best efforts, and you have been seeing that the credit rating indicators have been consistently improving, at least over the past 8 quarters specifically. Now moving on to the financial updates. Our consolidated revenues for the 9 months financial year 23 stood at rupees 2,034 crores and on standalone basis stood at 1,577 crores. Our consolidated revenues for Q3 stood at rupees 652 crores and on standalone basis stood at rupees 519 crores. The consolidated EBITDA for the 9 months stood at rupees 201 crores, up 14% year-over-year, and the standalone EBITDA for 9 months stood at rupees 172 crores, up 33% year-over-year. The consolidated EBITDA for the quarter stood at 75 crores and standalone stood at rupees 64 crores. The profit after tax attributable to owners stood at rupees 124 crore on consolidated basis for the 9-month period, up by about 45% year-over-year. On a standalone basis, the profit after tax stood at rupees 97 crores, up by about 61% year-over-year. For the quarter, the profit after tax on consolidated basis stood at 47 crore and on standalone basis stood at rupees 37 crore. A look at our key business metrics for the quarter. Core EBITDA stood at 13.5%, double-digit EBITDA margins as we retain our focus on technology, international, industrial, and EP projects. Core PAT at 8.8%, driven by operating margin improvements and control over finance cost through efficient banking lines management, both volume and cost front. Core return on capital employed, that is ROCE, stood at 21.4%, in line with our asset-light model and technology-focused approach. Working capital on absolute basis has continued the trend of reduction year-over-year, and the core working capital days stood at 90 days, driven by focus on working capital and cash management being the priority of the management. Gross debt stood at 297 crores, a reduction of 41% year-over-year for Q3. Improved performance on cash flows year-over-year with net debt at rupees 30 crore, and we are on track to continue remaining net cash positive by the end of the year. In line with our strategy to remain an international group, 48% of our revenues were delivered from rest of the world and 52% was from India. Our order backlog stands at over rupees 10,000 crores, with more than half of it coming from overseas geographies and projects. The quality of order book is enhanced with a majority mix of multilateral and federal government funded projects, industrial jobs, backed by adequate payment securities, largely in desalination and wastewater treatment, including recycle reuse and industrial water treatment space. The consistent level of order book over rupees 10,000 crore in the past few quarters, and the confidence from orders where we are preferentially placed already gives us a good confidence about revenue visibility and growth. We express our heartfelt thanks to our bankers, investors, fellow Wabagites, and all other stakeholders for the continued support extended to us. With this, we now open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. In order to ensure that the management is able to answer queries from all participants, kindly restrict your questions to 2 at a time. We have a first question from the line of Mohit Kumar from DAM Capital Advisors. Please go ahead.
Before I start, I would like to congratulate Pankaj and wish you best of luck. And thanks for the opportunity to ask questions. So I have 2 questions. Primarily, first is on the revenue. Our revenues have been kind of stagnant compared to 9-month FY22. The numbers are similar. While the order book has improved materially over the last 3-4 years, can we expect some more momentum in the revenues in going forward?
Yeah, Mohit, I think we have been communicating in each of our interactions that a couple of years back we have made a strategy document which is going to be implemented over the next 4-5 years. And we have clearly mentioned that we want to remain as a technology player and focusing on what we are good at in EP, engineering and procurement, and executing projects using our proprietary technology, advanced technology in the emerging markets. Earlier, we used to focus also on EPC projects, where we had mentioned many times to you that the C part is almost like a pass-through because we don't do the construction. We always outsource, and which, yes, it gives us a top line, but also reduces our bottom line. So that directional change we had done about 6 to 7 quarters back, and you can see the results very clearly that today our bottom line is substantially growing, which was planned. Also, our debt levels have come down, our cash flows have gone up, and you can see the interest costs and the bank charges have come down. So this is what we believe. We are creating value for all our stakeholders, and this is what the direction we want to go, in addition to also focusing on our service business, which is again an annuity business, with more and more DBO contracts coming and the HAM contracts, which gives us a long-term operation and maintenance. Our focus will remain on margin improvement and cash improvement.
So how should we think about growth in the next, let's say, FY24, given the order book?
We will have no choice but to grow it, because we had mentioned to you in the last con call and today also that our order pipeline looks really solid. And already there are a few very large projects where we are already a preferential bidder. So we expect in next 6 to 7 weeks, we should be having all these contracts signed and coming into an execution phase. And this will definitely give us an improvement in our revenues. But again, I want to just remind our focus will remain on margin improvement and cash improvement.
Good to hear that, sir. My second question is on the order opportunity. How does the domestic order opportunity is looking like at this point of time? And when you say that your large orders where you are preferred bidders, can you just let us know the quantum of those orders?
Yeah, as these orders are not in public domain, but we know there are 3 extremely large orders. We had also mentioned this in our Concall speech last time and also during the interaction in the Q&A, that we see at least about 5,000 crores where we are like a preferential bidder, and we should be able to close this in next 6 to 7 weeks. And this is what we are hoping will give us a good momentum to start the next fiscal year, which you said FY24. And also these orders all funded by multilaterals like the JICA, World Bank of the kind, and hence our cash flow should also substantially improve. This we have said before, this is going to be in the space of desalination, wastewater, and recycle reuse, which are all technology-based orders. So it should also have better margins.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. We have a next question from the line of Bharat from Money P Investment Advice. Please go ahead. Mr. Bharat? Kindly
Yeah, hi. Hi, am I audible?
Yes.
Yeah, sir. So I just had a question regarding the 5,000 order intake that you just said that you are the preferential bidder. So when do you expect the results for that particular order that you just said?
As I said, we should be closing in this fiscal year, so you can say in next 6 to 7 weeks.
Okay. So you won't be able to give any details regarding the order, right? The bids that you would...
We should not, because this information is not in the public domain. More than that, we cannot give you, but let's all keep our fingers crossed, and very soon we'll be able to make a public announcement.
Yeah, sir. Sir, and my second question, as I know that you only take EP contracts, the construction contracts you have not been taking. So I just want to know, looking at the margin, so what would be the sustainable EBITDA margin going forward? So would you be able to give me guidance on that?
Bharat, you're right, but just want to make a small correction. It's not that we are not taking EPC orders. EPC orders are not our preference. EP is what. So there will be always clients who would like to see a single point responsibility. So we will be taking some EPC orders, but our focus will be on EP. The margin will depend on the percentage of EP orders in the total order book. So this will be fluctuating, but our aim would be to move more and more towards EP, and technology orders is what we want to move, and also international and industrial segment is where we want to move.
Okay. Sir, and would you be able to just guide me the sustainable margins that you would be able to achieve?
As I said, that this margin will depend upon the mix between the EPC, EP, and our service business. But definitely going forward, as you have already seen in the last few quarters, there will be a margin expansion.
Okay. Okay, sir. Okay. Yeah, that's it. I'll get back in the queue.
Thank you. We have our next question from the line of Kaushik Poddar from KB Capital Markets. Please go ahead.
Yeah, a new managing director or a potential new managing director is here. I mean, what is the rationale for bringing in some new person at such senior level who is going to take over as a managing director, and what is the mandate given to him?
Very simple, my friend. Every organization has to have a succession planning in place. The simple rationale is we need to bring in people who can take over a period of time from the existing management. So that is the succession planning, and Pankaj is a result of that. We are very happy to have him with a lot of his experience and working in large organizations with system, processes, and governance. So we are very happy to have Pankaj as a part of the management team. And the mandate given to him is very clear from the title he holds, Deputy Managing Director and a Group CEO, which clearly shows that to start with, he's straight into the operations and trying to see how to improve Wabag's position and also meet the strategic goals which we have taken on ourselves 2 years back.
And secondly, I mean, you emphasize the role of the European operation for the technology part. Now, when in India the technical manpower is much cheaper, is there any reason, rationale for keeping the technology part in Austria?
Yeah, absolutely, Kaushik. It is because we are talking about technology, and technology is appreciated and in demand in the developed world. Like today, Switzerland is the capital of environment and water. The technologies which are demanded by the client in that country are not even spoken in the emerging world. So when we develop some technologies based on the market need and perfect it in the advanced world or the developed world, when we need this technology in the emerging world, we already have it ready. We have a reference plants, we have an experience, and that is the reason we have the technology centers in Vienna and in Switzerland. And also we are doing adaptation and of these technologies for the emerging world, and we are doing a lot of work in Chennai with help of some research scholars and universities in Chennai.
And what is your annual R&D spends, and how many people are there purely focused on technology?
See, our all R&D work is applied work. Some of the work we do along with the client, but if you say exclusively for this, maybe about 25, 30 guys are only working on this kind of thing, and our spend is close to 1% of our top line.
I mean, is it a standard thing over the past years? I mean, is it increasing?
No, it's standard over this, and all the group companies are contributing to R&D budget. And this technology is what we develop at the group level is available to all the entities across the globe.
Okay. And yeah, as I see, I mean, your EP part of your business is growing much more, and also you're emphasizing on service. So does it mean that the turnover may not be going up and you will be more focused on service part of the business? and this is the way to go. So top line is not the one we should be looking at more. The line is the way forward.
I think you are right. Just a small correction. As we are talking about our order book swelling by end of this fiscal year, we will have no choice but to have an increase in top line. But you are right in terms of top line is not the way to look at this company. Bottom line and more specifically cash flow.
Okay. And my last question, with the kind of increased cash flow you are having, I mean throwing up more free cash, can we see you are coming back to the dividend list for this financial year?
I do not know about the dividend list. I think together with all of you, we will have to make a call because as you know, we are investing in a small way, keeping our asset-light model intact into our HAM projects, which are also giving us an annuity revenue and good margins. So it's a question of how much you pay dividend and how much you work on increasing the valuation of the company by investing a small amount into these HAM projects. So this is a judgment call we will all have to make together. What is more beneficial to our stakeholders?
Okay. I think I've taken a lot of time. Thank you. Let others get in. Okay, thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, kindly restrict your questions to 2 at a time. We have our next question from the line of Darshika Khemka from AV FinCorp. Please go ahead.
Hello, sir. Thank you, and firstly, congratulations on a good set of numbers. I had a question. Am I audible, firstly?
Yes.
Yeah, little bit louder will be better.
All right. So, am I audible now? Any better?
Please carry on. We'll manage. Don't worry.
Yes. All right. So, I see that the receivables that the company had stood at around 2,000 crore number. It would be great. I think wrong. It stood at around 1,400 crores. Could you help me with the breakdown into TP Genco and TS Genco and AP Genco? It'd be extremely helpful. And also, if the company has provided for any number in the last 9 months. I asked this question because in Q1 Concall you had mentioned that you usually provide for 60 to 65 crores on an annual basis.
Darshika, this is one point which we mention as part of our notes to the results. You can see note 4 to our results, which gives the receivables from TS Genco and AP Genco and also from TechPro. So we basically divide it into the 3 brackets in which we view this. Number 1.
Okay.
Number 2, yes, we said in our Q4 as well as earlier calls that we consistently provide. There is a board mandated ECL policy which we use for the purpose of assessing provisions and providing. And here we are also providing on the same lines this year as well consistently. And you can see in note for the total of these 3 numbers is 350 crores in total, and this is net of all the provisions that we have made to 31st December.
Could you help us quantify the number that you provided in the last 9 months?
Maybe 20-25 crores.
Okay, thank you.
Thank you. We have a next question from the line of Nikhil Abhyankar from DAM Capital. Please go ahead.
Thanks for the opportunity, sir. So, can you give an update as to what has happened with the Chennai plant? We were one of the 4 bidders.
Yeah, we had mentioned this earlier. Maybe you have missed out. Even in the last con call we had given. Out of the 4 bidders, only 3 bidders had submitted their bid. Technically, it was evaluated and it was approved for price bid opening, and that's the reason we mentioned. This is one of the projects where we are preferred bidder, and we expect in next 6 to 7 weeks award.
Understood. And and any other specific desal orders that are coming up?
Yeah, a number of them. I think, as we mentioned, going forward, we see manufactured water, and for the sake of clarity to all of you, we call manufactured water because this is manufactured by us. It's not God-given water as it is in the question of rainwater or surface water, which gets from the lakes or river. This is manufactured water because in its original form, this water is not usable. So as a company, we manufacture this water from a non-usable form to a usable form, whether it is recycle, reuse. We do offer used water. Already it is used. We are not throwing it away. We are treating it and recycling it for non-potable purpose, agriculture, and also indirect potable purpose. Second, it's again seawater in its normal form. It's not usable. Desalinating it and making it as a potable water. Hence, there's a great market for manufactured water going forward, and you will see a lot of our orders coming going forward will be from these two segments.
Understood, sir. So, and just a final question regarding ZLD. So, one of the OMCs had come out with a $4 billion rupees project. So, are there any more projects coming up, and are we participating in them?
Sorry, what you mentioned about 4 million?
4 billion, 400 crores of project had come up for ZLD, zero liquid discharge, from one of the OMCs. So, are there any such projects in line?
I think today the pollution control boards are tightening their norms. You cannot discharge effluent or wastewater which is not meeting the discharge standard. So there's more and more demand going forward is going towards ZLD. We have just completed one project in India and we are executing one more project in abroad. So this ZLD is going to be a way forward going forward, and also they are going to become more and more affordable as we have a expansion of capacities. So yes, it is going to be also a technology of future.
Sure, sir. And just a final bookkeeping question. Can you give us the number for inventory, trade receivables, trade payables, and advances to and from the customers?
Nikhil, I'd suggest we take this offline.
Sure.
I mean, you can contact the investor relations people and they will give you this number. Otherwise, it'll just be a number reading session. Yeah, fine?
Sure, sir. Thank you.
Thank you.
Thank you. We have our next question from the line of Hemant Soni, an individual investor. Please go ahead.
So thank you for providing me the opportunity. Sir, I have one question. So I understand that we are focusing on the EP part and not on the construction part and the margins, and we are focusing more on margins basically. But as per your earlier calls, you had guided that H2 revenues will be better than H1. Now currently we are seeing that Q3 revenue is down as compared to Q2. Can you throw some light on that, sir?
Yeah, I think project business is very lumpy business. If we would have got a few projects, what we planned in Q3, we would have got that. And some of the projects for decision making, it gets postponed by a month or two, and it happens. But generally what you're saying is always a trend. Always H2 will be always better than H1. And I still believe that going forward, we still have a chance in this Q4 to be good. And already we had done quite a bit in H1. And we definitely, going forward, some of the projects will get converted, will show some revenues, at least in the engineering front in the next 2-3 months. We will see in Q4 a good result. But overall, this kind of EP projects, large technology projects, will continue to give us good margin and good cash flow. So even if some revenue may be slightly lower than we all would have expected, but margins are intact, cash flows are intact. You can see even our margins have expanded almost 40-50% compared to the last year 9 months. So there has been a very decent growth in terms of margin and cash flow.
Yeah, I understand, sir. So can we expect that some of the revenues to be spilled over in Q4?
Yeah, as I said, it all depends whether we get some of the orders in next 1 or 2 weeks or 6-7 weeks. If we get it in 1 or 2 weeks, obviously there will be revenue flowing from those orders. But if we get towards the second half of March, then there will not be much revenue flowing in this Q4.
Okay, sir. And sir, can we expect to close this year, it is FY23, with 15,000 crores of order book, because currently we have 10,000 and we are the preferential bidder for 5,000 crores of order. So can we expect the order book to be 15,000 crores by end of FY23?
As they say in Arabic, Inshallah, why not? I think we all are praying and wishing for it. So let's hope that next time when we meet, we can celebrate 15,000 crores.
And sir, this order book, if it will be 15,000 crores, is executable over a period of how many years?
Generally, it is about 3 years, but you can take it about maybe 3.5 years, because there's always some reason of delay or something. It adds 6 months. So say about 3.5 years.
Okay, sir. Okay. Thanks a lot.
Thank you. We have our next question from the line of Omkar, an individual investor. Please go ahead.
Sir, very good evening. First of all, congratulations for your good set of numbers in respect of net profit and very good operating profit margin at 11.5%. And I'm very much audible, right, sir?
You are.
Oh, great, sir. So after Q2 results of the Wabag, I have gone through the interview of Rajnish Chopra, who is a global head for Wabag. He's saying we are having more opportunities in Russia to win more projects. He further said that as Western world sanctions are there in Russia, global competitors of Wabag are not active in Russia. Therefore, Wabag is actively and strategically targeting Russian market. And active bidding is happening from Wabag. And before March 2023, 3-4 bids will get submitted in Russia. And he further said Wabag is confident not only they will get the orders, but also they will get good margins. So my first question is, do you think, is it a safe bet to get orders from Russia where geopolitical risk still involved in Russia? And why are we taking risk to win orders in Russia as Russia-Ukraine war still going on? We have learned already a lot of things from the Abjanko project where our money got stuck. But as we are getting a good margin, so that is the only reason we are bidding more in Russia, or some specific reason for that? Over to you, sir.
Thank you. I think all your questions are in the answer what you said. Rajnish had mentioned in his interview.
Right.
Russia was always a spot market for us, and we are considering whether it should be a target market. And you said that as some of our technology-led competitors are moving out or have moved out already, lot of their projects remain incomplete, and clients have no option but to choose somebody who has a technology know-how to complete these projects. So we consider this as a great opportunity for Wabag again to demonstrate their technological superiority. Regarding your risk, and very valid question, see today, you know, the Indian government is opening up doors for Russia and even talking about rupee being a tradable currency, because there's so much of money which India has to pay to Russia. So you would have read in the news that rupee is going to be a tradable currency between the two countries. Second, we don't take any international orders, especially in countries like Russia, where we do not have a confirmed, irrevocable letter of credit before we start our execution. And that's the reason we call some of these orders like framework orders till we get a letter of credit. Like in Cebu, which we are executing, we have $100 million of executable LC, and that's how we restarted the project. So as far as the risk is concerned, we do not see as a risk. As soon as we dispatch our goods, we have our letter of credit to draw the money from the banks where we have got the LC assigned to them. So we do not see the risk, and you can be rest assured we know how to manage risk. We have worked in the Arabic world, we have worked in the African world, and all this we work either with ECGC cover from Government of India or with letters of credit. So we will not take any financial risk, and that is the reason most of our orders are again multilaterally funded or central government guarantee backup. So you can be rest assured no financial risk will be taken by this company.
Oh, great, sir. Thanks for the update. And quick question regard to Russia project only. As the management said, in Russia project will contribute substantially in S2 in Wabag's revenue. As 1,000 crores order still to be executed of this order, how much Russia Amur project contributed in Q3 and how much it will contribute in Q4? I am not expecting exact figure for quarter 4, but how much it has contributed in quarter 3, that AGCC project?
See, AGCC project, it only got revived in Q2. So Q3 was more on engineering and some of the change of vendors from the sanctioned countries to the non-sanctioned countries. So the contribution was not that great, maybe 10% of the total revenue. Right, but going forward in Q4, we are expecting this to go up to 15-20% of the Q4 revenues. And next year is where we will supply the goods, and it will contribute substantially in FY24.
Okay, got it, sir. And quick question on that 400 MLD Jika project. As we are talking about this project since February 21, in last conference call also you said pre-qualifications were over, technicals were submitted, the revaluation are completed, and now you were waiting for the price bid to be open. So whether the price bid has already opened or not?
Yes.
It is already open. And when the government will announce the preferred bidder, I understood through your answers in next 4 to 6 months the final outcome should come. But any specific timeline or deadline is there for this project, or it still can get postponed for 3 months also?
Normally it will not. As I said, we cannot hold government, but the planned timeline is within this fiscal year, because this is again a financial bids are open, the evaluations are almost going to be completed. The state government, because of the size of project, will have to approve it. Then will have to send it to JICA for their approval, and after the approval, they can give us a letter of award.
Great, sir. Thanks for answering my question, and again, congratulations for good set of numbers. Thank you very much.
Thank you.
Thank you. We have our next question from the line of Sheen George from Geojit Financial Services. Please go ahead.
Hello.
Yeah.
Good evening, sir. Can you give us the order intake?
Can you be a little louder or take your handset?
Yeah. Am I audible now?
Yeah, better.
Can you please give us the order intake estimates for like FY24 and FY25?
I can only tell you, and you have seen, water is a preferred sector in India. A lot of money is getting allocated in the water sector. Same is the thing in Middle East with the oil prices at its all-time high. There's a lot of affordability for the Middle East clients to invest in water projects and in general infrastructure. So I would say the complete environment is very positive, and we are bullish about it. And with Wabag's global position and standing, we would have definitely our share of orders. So you can always be feeling good that we will have a good year next few years also. But with our order backlog being at all-time high by end of this fiscal year, there's nothing to worry about the growth or the execution, what we will have to do in the next few years. We have enough to chew in the next few years.
Okay. Sorry, what is the expectation percentage which you are expecting?
Sorry, we can't hear you.
George, please use the
What
handset.
what is the expectation percentage you are expecting for the next 2 years, approximate?
I don't think I should guess such things, but I think the markets you have seen, we have seen our position over the last few years. You can only feel that we will not be desperate in going for orders. We will select the orders based on the merit and the defined guidelines we have internally, and we would still have enough orders to give a good growth in top and bottom line, more focused on bottom line and cash flows.
Thanks.
Thank you.
Thank you.
We have our next question from the line of Arun Chakravarti, an individual investor. Please go ahead.
Good afternoon.
Good afternoon.
How are you? Congratulations. This is really a small but beautiful result.
We have been waiting for a few quarters already.
Yeah. But this time it was it is a very good result. I was very much pleased. But all of my questions have been answered.
But still we are happy to hear your voice.
His line got disconnected. We'll take the next question from the line of Manish Shah, an individual investor. Please go ahead.
Thanks for the opportunity and congratulations on a very good set of numbers. Sir, out of this 5,000 crores of orders which you are expecting till the end of March, how much is this Chennai order, sir?
See, at the moment, it will not be fair for us to disclose these numbers as of now. But as a ballpark number, we have given you some 3 orders which will at least contribute 5,000 or more. That's all I would like to say at this stage, because the information is not public and I don't want to jump the gun and give numbers which are not in the public domain.
But it should not be more than 40%?
No, it will be far more than that.
So that means we are very much dependent on that single order, sir.
No. When we say 5,000, that doesn't mean these 3 orders is equal to 5,000. It will be equal to much more than that.
Okay. Sir, and out of these orders which you are expecting till the end of March, how much is the contribution from rest of the world and how much is contribution from India, sir? Approximately.
See, it will be because of this large order in Chennai, predominantly it will be from India in Q4. But there will be a substantial portion also coming from rest of the world.
At least 60-40 India, 60 India and 40 out of the world, rest of the world?
India will be much more in this case.
In this case. Thank you for the opportunity, sir.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Sri Harsha, an individual investor. Please go ahead.
Afternoon, everybody. And congratulations for the good set of numbers. Can you tell me is the other prospects for order like the Chennai desalination order, which is as big as this order, which is available in India?
Generally, over the years, we have seen that the ticket size of orders are going up year on year. But to have something comparable to Chennai, it will take some time. But there are orders, may not be they are comparable to Chennai, but they are not very much smaller compared to Chennai. Today, average size is going around 1,000 crores. So that's the kind of orders which are in the pipeline, are plenty of them. So I think nothing to worry. Today, your company, Wabag, is focused on large, complex, advanced technology orders. So we will continue to focus on large and complex orders.
Okay. Another question. I want to know the opportunities in the zero liquid discharge front, as more and more companies are actually concerned about the environmental issues.
Yeah, absolutely. As the regulator and authorities are tightening the implementation, so I think a lot of industries are getting notices and ensuring that they meet the discharge standard, including the municipal authorities also. So I think there has to be a way of balancing between economics and the environment. And that's what government is trying to do, is trying to see how to balance between this, because zero liquid discharge is not one of the cheapest technology, and they have to ensure that the industries can afford it and still they will be able to meet the discharge standard. So I think this is what most of the work is going on. A lot of brainstorming is happening between the water managers to see how to meet both the ends. But one thing is very clear, going forward, it's only a matter of time. Zero liquid discharge will become a state-of-art technology.
Do we have any patent or trademark registered in the zero discharge liquid front in the name of company?
I don't think it's a technology which needs any trademark or a patent. It's more about your engineering skills. How do you use your experience and know-how and put the scheme together and tailor-make it for the customer's use? There is no standard technology which can be just used. It can be membrane-based technologies, it can be thermal-based technologies, to have a combination of both to ensure that we meet the required results. So it's not a technology, it's about your engineering and experience capability to put a scheme together which will meet the required demand and also be economical.
Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have our next question from the line of Manish Shah, an individual investor. Please go ahead.
Thank you, sir. Sir, what is the probability of our getting these orders, which 5,000 crores, which you told till March?
See, our probability of getting this order, as I told you, we are preferred bidder, is very high. Now, March is the target of the government and the funding agency to give this order in this fiscal year. So I would say that generally the probability is very high.
And sir, another question about this other income, which is less in this quarter because the contribution from rest of the world is less, right?
Sorry, which other income you are talking about?
Sir, other income in this current quarter is down in compared to the second quarter because the contribution from the rest of the world is down. So we are not able to get any incentive or dollar income. So in the fourth quarter, it will correct itself?
Yeah, I think you have to see. I think this was a question even in the first quarter. See, there is company's business is international. We do some business in the geographies where US dollar is a currency. We also do business where euro is a currency. So in the third quarter, US dollar has appreciated, but also euro has appreciated. So it has a negative cross effect where there will be some forex loss on euro and some US dollar gain, and hence you see this number to be very low compared to the earlier quarters.
Sir, another last question. Sir, at least we should get 3,000 crores of orders till March, at least.
Why are you reducing our target? You should be increasing our target.
No, sir. I'll be the happiest person if you get 5,000 crores.
Let's be optimistic. Let's pray for us. Let's pray for your company that we do what we commit.
Yeah, best of luck, sir. Best of luck. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the call to management for closing comments. Over to you, sir.
Thank you. A few words before we close in summary. I think it has been again a profitable growth. Our order book is more than 10,000 crores. Order pipeline looks strong with lot of orders where we are a preferred bidder. We will continue to focus on international geographies, EP orders, technology-based orders, which will help us to not only improve the margin, but also remain cash positive by the end of the year. We will remain on track to continue to be a net positive company by the end of this fiscal year. Our business is all about clean and green, ensuring water security and sustainability. Future looks bright for water sector, and Wabag is well placed to be the key global player in contributing to world's water sustainability and security. Once again, thank you everyone for your participation in our 9-month and Q3 FY23 earnings call. We have uploaded the analyst presentation in our website. In case you have any further queries, you may get in touch with Stellar IR advisors, our investor relation advisor based in Mumbai, or feel free to get in touch with us directly. Thank you.
Thank you. On behalf of VA Tech Wabag Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.
The conference is no longer being recorded.